All right. I would like to welcome you to another episode of The Foundation. My name is Sot L. I am your host. Appreciate you being here for another episode. I trust the microphone is coming in luxuriously. Today's show is entitled The Economics. Nope, that was last week. Today's show is entitled The End of Year Trustee Duties. That's what we got cracking today. So, as you know, this is The Foundation. We are a high frequency radio network. Shout out to Yusuf L, where we understand incorrect information incorrectly applied can get you hurt. Correct information incorrectly applied can get you hurt. So as always, we are correctly applying that correct information here at The Foundation. I want to give all thanks, honors, and praises to the creator of the boundless universe. And, want to big up, shout out Yusuf L, High Frequency Radio Network creator. SPCUniversity.com if you're looking to do your secure party creditor dance. You know what it is. Welcome to thefoundation.com. You know who we are. If you don't, welcome to the foundation. You can check out the email list to make sure you sign up for it at the website, welcome to thefoundation.com. We got exclusive offers, events, content, etc. Also at the website, we got a PDF section, 100% free. If you're interested, kind of what we call occult information, occult meaning hidden, not necessarily, black magic or anything. I don't know nothing about that, man. But definitely, what some would consider controversial. Not all of it is really relevant to the foundation here, but you know what I'm saying? It's just stuff that we offered, what we saw being charged for. We put it there for free. Also at the website, you can check out our education section. I think one of the most important, if you're just getting into trust information, private structure information, is getting that trust primer, which is over 18 hand-picked documents by yours truly. Get you started, get you on the right track, understand the difference between public structures and private structures. I think a lot of people say it like that, right? And they'll be like, public structures, private structures, and just to sound cool. We're just talking about things that are organized at the state level, being public, and those that are organized through the right to contract, or private right to contract, meaning private. Private more so common law, which is still in effect. You get to choose your jurisdiction, so to speak. But, ultimately you got public created structures. Those structures endowed or allowed to be in existence or brought into existence via, statutory authority. And then you have, contracts. Pretty much the, antithesis to antithesis. But, we'll get into that. Then the trust primer really puts you on track to, really start to grasp the concept that I just broke down. Hopefully it was, pretty simple. Also, we have the Foundation Trust Series. It's 1, 2, and 3, beginner, intermediate, and advanced. From what the trust is, where it derives its power and authority. Is it recognized in the public? Can you open up a bank account for a private trust? Absolutely. And I would go so far as to say, you're not really doing business in the public unless you have a bank account. But all of that is covered and more. Black's Law Dictionary, definitions, Supreme Court case citations. That's the Foundation Trust Series. Put you right on track. Boom, you're done. And then, if you're interested, we also have at welcometothefoundation.com, Passport No Social. If you're interested, depends on how private you want to be. Some people, and I'm a firm advocate in no one can tell you what privacy means to you, or being private, or going private, or what have you. It's a personal thing. And we'll just leave it at that. But that is available too. Passport, no social. Start with part one, and then part two. Part one is how you obtain it. Part two is how you use it. And shout out to Chris L for sharing the information with the platform. Also, you can find all of our social media and everything at welcometothefoundation.com, Instagram, Twitter, so on and so forth. You can book a consultation. You can make a donation. I'm going to do it all at the same location as welcometothefoundation.com. Peace to all the listeners, everyone listening live. Thank you. We're doing a YouTube dance. We got a little, what was it? Scheduling issue. Last week it was a technical issue. So it's 2 weeks in a row. Kind of means something to me. We'll see if we hit, the lucky number 3. But, if you're checking out the show, however you're checking out the show, peace to you. We do upload to, just different podcast apps and are on several different platforms. Working on Rumble. We're going to do that dance with Rumble pretty soon. Got a lot of feedback that, people want that. So, hey, peace to all the, people who check out the content. Peace to all the trustees here in private trustee training. And peace to everyone that we have come into contact with in any way, shape, or form here at the foundation. I think it's really the people who check out the show. It's really the people who, day in, day out, week in, week out, month in, year, so on and so forth. Just, that have been willing to invest in their private education, willing to, make strides, to do better, to be better, to learn, to do a dance. You know what I mean? So with that being said, let's jump into the show. I got no music for y'all yet. I'm still learning this software with the YouTube, and then I got to use the other thing. There's a whole different software that I have to use to stream live on YouTube. So I'm using that software, and I can't really figure out yet how to how to make the the dance. So I'm working on learning this software. So no music, no nothing. I know some people love the music and some people hate it. I think you just in between. Me personally, helps me hit the vibe, but I can get loose off orange juice, if you know where I'm coming from. Current events will go live tomorrow on here, YouTube, because we're doing current events outside of the shows now, so we can stay strictly to the content. But what is the content? End of year trustee duties. We're getting, obviously, we days away from the end of the year, right? And, a lot of people will want to wait until April 10th. April, I don't know, 13th, before they really want to do their dance. And that's cool because, individuals are allowed, that, what do you call it? Privilege. It's a privilege. It's definitely a privilege. Whereas a trustee in a fiduciary capacity, we understand that, we should understand that we need to get ahead of this. And getting ahead of this means, at the end of the year, around this time, we start getting things together. We start handling the end of year trustee duties. And if you don't know, or if you're just picking up private contract trust administration and the benefits of private contract trust administration, the benefits of privatizing your wealth, the benefits of titling assets, whether personal or real, in trust, and those protections. And in order to afford all of those protections, all of these benefits that, are spoken on. And real quick, I'm not an attorney. I'm not a lawyer. I don't give legal advice. We never give legal advice at the foundation. If anyone contacts you and they say that they're part of the foundation and they're trying to give you legal advice and they say that they're a lawyer or something like that, I'm just going to let you know that They not from the foundation. They don't represent us. So there's that. Don't get legal advice. This is for entertainment purposes, educational purposes. Whatever you choose, can be both, could be one, could be either. But when I say end of year trustee duties, I'm just gonna let y'all know what I do. I mean, we understand this, right? When I talk about trust and trust administration, I'm talking about me, or what I do or would do, and that's that's all I can do. Can't tell you anything. I'm sorry. But these are the things that I do at the end of the year. So I have some disclaimers first and foremost with regards to my trust administration. Number one, and this is going to be maybe something that you've never heard before. It might be something that you've already distinguished. Is that number one, I personally, me, Sot L, and or derivatives, I do not have any personal accounts. Now that's a personal, private choice. I believe I did have one and they closed it. It was with a credit union though, because everything I do is through trust or through a what you would call a corporate structure, LLC, corporation. But I'm telling you, because of the Corporate Transparency Act of 2024, I am likely going to restructure. But, maybe that's another show. It probably is. So first thing would be, and, you can do what you want to do. Every estate is going to be administered differently. Every structure is going to be administered differently. And, that to me, that's, what is it? Free will. My free will ends where yours begins type of dance. So I have no accounts. Let's talk about institutions. Let me do it like that. So let's say a financial institution, let's say off the top of the head, Chase, right? I as trustee would never have personal Chase accounts, individual Chase accounts, lines of credit. I don't care what it is. Mortgages, doesn't matter to me. No personal or individual accounts where there were trust or corporate accounts, period. Now, obviously, that's not a trustee duty at the end of the year. That's just how, we rock over here. Myself and the board included, obviously. It's your choice. And specifically, it's not illegal to my knowledge, but I can't give you legal advice. But it's to, avoid any problem, accident, because these things can lead to the allegation of commingling, which opens up an audit possibility. And, whether or not you are administering legally and lawfully, and, everything is up to par, you have 100% substantiation, whether or not that is the case, it still is energy that is required to interact with the Internal Revenue Service, and you're not going to get paid for that. So I just don't have corporate or trust accounts anywhere near the private accounts, the institutions. I don't. And there's so many institutions, and people, it's about convenience. You don't want to drive to multiple spots. You don't want to have multiple online banking logins. I get it. It's a personal choice. I just don't do it. So with that being said, number two, I don't do let's put it like this. The organizations do not do the e-statements, the e-billings, the send you your bill. It has to come in the mail. And the reason why is because me personally, as far as my administrative duties are concerned, one of them does not. I know they don't include. I've read the trust indenture multiple times, probably 100 times, if not more. Seriously, 100%, no joke. Minimum 100 times, and I don't see anywhere in there that I'm supposed to keep QuickBooks and input all these transactions in QuickBooks myself. I didn't see that anywhere in the indenture. I didn't see it anywhere in the minutes. And I understand that CPAs, certified public accountants, tax return preparers, that they really like QuickBooks and they love that extra accounting step. It's not it doesn't fall within my fiduciary responsibility to, maintain a QuickBooks account. So me personally, I don't do it. You can do what you do. I tell the CPA on behalf of the trust, I'm willing to, pay more if, the QuickBooks factor is an issue, or the lack thereof, essentially. I keep all of the paper statements for the trust account or trust accounts, because, that's my duty, and hand those over to the accountant. So, number one, no personal or trust and corporate accounts at the same financial institution. That's personal, whatever. You do what you do. I can't give you legal advice, no advice. I'm sorry. If you're looking for advice, I can't help you. And I'm not saying that to be mean. If you understand what I'm saying, it's actually respect. It's out of respect, 100%. And number two, I don't do the e statements. We allow the bank to incur the cost of printing because there's no difference in, the fees of the account. So we allow the bank to incur the cost of printing. And that's personal. Now you can do the e-statements and they notify you, and then, they have the PDFs when you log into the account for the trust, and you can download them and compile them and then, put them in a folder and zip them, because you can't send them all. They're probably too big to send in one email. You can do all that. I don't do that. Or you can do the QuickBooks dance. You can do all that. I don't do that. So getting into the duties, compile all the bank statements. So number one, end of your trustee duties. And honestly, the last and final bank statement, you're likely not going to get until January. That's just how bank statements work. But compile all of the bank statements for each trust. And I would, I use the Manila tabbed file folders, pretty cheap. You can get a box of 50 of them for like $5-10. And I label it for each structure, and I put all the bank statements in a Manila not an envelope, but a Manila folder, tabbed folder. That's number one. And when you do that, they got one thing knocked out. That's it. And you'll notice, if you haven't done it, like each time you get something done, not only do you feel a mild sense of relief, but you feel a sense of achievement as well, because you're getting it done. And it's really just time. And I understand, because, I have a lot of stuff to do during the day, let alone just try to chill and, either study, learn, create something new, or just try to veg out, watch a stupid show. But, it comes down to time. Number two, excuse me, you got to aggregate all disbursements for K1s. And this makes it easier on the accountant. And I have no problem with that. And ultimately what that means is going through each transaction, and it's not going to be an incoming. It's not going to be a payment. It's going to be outgoing. So all outgoing payments of the trust, You can aggregate them over the year, and it could just be one payment. And that's fine. But typically through, business dealings, you're going to be administering business on behalf of the trust. And it's going to, compose of multiple transactions throughout the calendar year or the taxable year. So I would aggregate all of them, and it's nothing. Just go through the bank statements, and I use different colored highlighters. So I got a yellow one, an orange one, the red one, the pink one, the blue one, or whatever. And I color code highlight each transaction for each business. So each business transaction, aggregate those, and aggregate all the disbursements to the beneficiaries or beneficiary. And word of wisdom, can't give you advice, so I can't give you a word of advice, but a word of wisdom, one of the biggest red flags for a business trust is no disbursements. Yeah. So, yeah. And there should be at least one disbursement per year. At least one. But as I said, every structure is going to be administered differently. And as I said, these are going to be for the K1s, for the disbursements, and then business is going to be 1099s. And you should aggregate all of the W-9s. W-9s are, if you don't know, is a request for taxpayer identification number and certification. It's something that every entity or person that receives money or is paid money from the trust should fill out. I personally would say have every vendor, contractor, consultant, what have you. I personally would have all persons, businesses, or individuals that are paid by the trust fill out a W-9. I believe, I can't get legal advice, I believe it's $500 and up, and that's annually. And that's why you'll sometimes see, especially with like business to business, specifically an office supply company, when they send their invoices, they typically have, or generally, they will include their EIN. And it's because businesses know that this is a requirement. Excuse me. But a request for taxpayer identification is the name of the business, the address of the business, and the EIN, employer identification number of the business, or the social security number of the individual. You should be making this available. And a lot of times, I don't think any business, like, business to business, would deny your request for a W-9. A lot of businesses have an automated way of doing it. And this is what you give as trustee to the accountant to substantiate all payments. Where did the payments go? Excuse me. And then on the other end, where did the disbursements go? Those are K1s. And of course, you need a W-9 for K1s as well. So any person, corporation, individual, trust, estate, doesn't matter, should submit, any and all should be submitting a W-9. So that can be aggregated at the end of the year for the end of the year trustee duties. So number 1, compile bank statements. Number 2, aggregate all disbursements for the K1. Number 3, aggregate all expenses, which would be payments. Like, how much did you pay this company for the entire year? How much did you pay this person for the entire year? And of course, this is contract. If your payroll, and generally, I've never personally seen a trust that had a payroll. Typically, that's done through an LLC or, something of that nature, corporation. Doesn't mean they don't exist. But, a payroll would have that information as well. They would know this employee received this much, annually. So we have to aggregate these things. So you also secure the EIN document for the trust if you can. Knowing the number usually is sufficient. I like to be 100% official and, submit to the CPA the actual EIN print off, the paperwork, from the Internal Revenue Service. Generally, if you obtain the EIN from online, you have the PDF. You should have the PDF. That means unlimited print offs. So you need the EIN document for the trust. You're going to need the short form for the trust. Obviously, you got to find that. You got to find all of them, and you can put it in the same folder with the bank statements. Put the EIN in the same folder with the bank statements. But the K1s not the K1s. It would be the W-9s. Put the W-9s in there with the bank statements. Have it all in the folder. I like to hand them a folder. So you got bank statements, you got W-9s, you have the EIN. You have the short form. Now, unless that you're already acquainted or have been dealing with an accountant, you need to find one. I guess that would be one of your trustee duties. A lot of people are setting up trusts recently. There's a big movement to, at least create a separation between oneself and the government. And I understand that. I'm part of that. So a lot of people hesitate when it comes to filing when they set up their trusts. And then that hesitation for filing leads into fear because, if they're operating, they operate for a year or so without filing. And then that fear typically leads to stagnation because that operation without filing that creates the fear typically and generally is going to cause that person, that man or woman to stop operating. Trust returns are they're every day, they're every year, they're very simple. Number one. Number two, not every CPA is familiar with them. Most CPAs are just familiar with, an LLC that isn't properly classified. So it's basically a disregarded entity. And there's I don't know it because I've never had to use it, but there's a portion of the individual tax return, Schedule C. That's what it is. Most people that have a business claim the business profit or income on a Schedule C on their individual tax return. That's not what we do. But that's what most CPAs are used to. So the main thing is to find a tax preparer or certified public accountant that's familiar, that has they have populated, I guess. I don't know. I can't think of a better word. Returns. They have completed returns on behalf of trusts and they've been submitted. And that's the first question. You call these guys up, call up a CPA and say, hey, have you guys, do you guys do trust returns? And if they say no, say thank them for their time and hang up. If they say yes, you ask them, oh, okay, how long have you guys been, preparing trust returns? Really just a filler. If they say anything less than 2 years, I'd be wary. But other than that, it's really just a nothing question. But the real question is, how many of those trusts that you've prepared returns for have been audited? And the answer you're looking for is 0 or really anything below 3. If they've been preparing returns for longer than 2 years and they've had any audits, I would be skeptical unless they've been doing it for five or more. Do you understand what I'm saying? And I think the fear derives out of like the non-filing of trust because you don't know what to do. I just told you what to do. This is how you do it. It's done every day. Private contract trust, they're utilized every day. There's corporations that you think are corporations and they're actually trusts. Don't believe me? Check it out. I can't give you legal advice. I don't know what I'm talking about. I'm crazy. I am out of my mind. Haven't taken medication for my mind. I call them my mind meds. Haven't taken them in years. Decades, honestly. So don't believe me. And I'm not an attorney. So I can't give legal advice. But yeah, that's how you do it. A lot of times you're going to have a business trust. Well, let's talk about a business trust. Well, a lot of times you'll have a business trust that has membership interest in an LLC. If that is the case, you are pretty much going to want to duplicate what I just said, which means aggregate the W-9s. You want to get your hands on the articles of organization or incorporation. Organization being an LLC, incorporation being a corporation. You want to get your hands on the EIN document, the entity designation document, if you have it, if you even know what I'm talking about. If you don't, you can book a consultation or join the training. I'm not playing. I can't give legal advice. No joke. And you want to aggregate all of the bank statements. And, any disbursements. Believe it or not, those are K1s as well. it makes it easier for the accountant. And, I think me personally doing it this way is the requisite way to do it, to where I am fulfilling my fiduciary responsibility with regards to staying abreast to the administration of this entity without having to get all the way up in it. If that makes sense. I still know that, the numbers. I know how much was dispersed because I aggregated it. I know how much came in because I aggregated it. I know how much was expensed because I aggregated the expenses. And then, I give the accountant everything they need. I like to go in and, meet with them and stuff. And these accountants, they like to do everything online. And I don't, I respectfully decline. So I like to, go in there. At least the first couple returns, after that, we can get more comfortable and, I can send you some stuff or whatever. But, we're talking about security. A lot of things are getting hacked. I don't like sending sensitive documents over the internet. What database are these documents sitting in? Is it yours? No, it's not. It's actually Alphabet's database. It's Google's database. It's sitting in a Gmail that has been branded as a corporate email half the time. Which is fine. But so I like to go in and sit down and have a, short conversation, give them what they need. Now I'm going to tell you, and I'm going to say this on the air. You may get pushback, private contractual trust. They see the short form and they look at it and they're like, the assumption is going to be, and this is if the accountant or the CPA has no experience with a private trust. The assumption is going to be that it's a statutory. It's the trust falls under statutory jurisdiction, and with that comes statutory laws, specifically disallowances, things that you can't do, things that trust can't do. And I've come across this before. Actually, several accountants. I've spoken to several accountants. An enrolled agent being one of them. And this guy actually, he did the returns. But ultimately what the conversation revolved around was, this is not a state statutory trust, sir. This is a contractual trust. It is not under state jurisdiction. It's under the contract jurisdiction. This is what is known as a complex trust. And any, any CPA worth their salt, if you get what I'm getting at, is going to be triggered, and I'm not saying in a negative way, but be triggered by the word complex when you say complex, because the IRS recognizes 3 different types of trust: simple, grantor, and complex. So when you say it's a complex trust, man, it creates a distinction. And whether or not they are familiar with complex trust doesn't matter. And I'm saying this on the air, it doesn't matter. Because the important thing is that you created that distinction. If you watch football, your line just made a hole. And through that distinction and through respectful dialogue, you are likely to get what you want. and another thing, let me look. Another thing. I like to respectfully remind these accountants, these CPAs, that you're simply preparing the return. You're the preparer. You will be signing as the preparer. I will be signing as the trustee, attesting to the information in the return. I will review the return, but I understand and you understand that you are going off of the information that I gave you, and you are offering a service to the trust. So you sign as a preparer, and I am fully capable and 100% willing to sign in my fiduciary capacity as trustee on that return. And that does two things. The first thing it does is it reminds them that because they know that, hands down. The second thing it does is it tells them that you know that. And with you knowing that, it implies, in my opinion, that if this return is questioned, you're not going to get anything negative from me. Because I just acknowledged that you are preparing a return based off of what I gave you as trustee, which is being accountable. So they know that they're dealing with someone accountable. They know that they're dealing with someone who is informed. And if you're respectful and you can control your emotions and you're cordial, I would say 9 times out of 10, they're going to move forward with you, or specifically move forward with, offering the service to, the trust. And that's that's the most important thing, in my opinion, is finding, a CPA tax preparer that is willing and apt to prepare the return in the way that it's supposed to be prepared, in the way that it will appear according to the administration, which is according to the contract indenture. And it's that simple. We fear what we don't know, so we look to avoid what we don't know, because we fear what we don't know. And what I just consciously did, and I don't want a cookie or a cracker or anything. I'm not special. I'm not unique. I'm not, very impressive. I'm just beholden to some information that, others aren't. But knowing these fundamentals is important. And I just saved you time and energy. I saved you stress. I saved you hypothesizing and theorizing. If you heard what I just said, I just dispelled ignorance. And that's from my personal, private experience and my private instruction here at the foundation for trustees and trustee training. It's that simple when dealing with tax returns. Now, some people, they ask, hey, so the accountant, he said, I have to do, the trust has to do a state return. I said, really? I said, let me ask you something, man. If the trust does not exist due to any authority or authorization of the state legislature, if the state didn't create the trust, why would the state or any state subsidiaries state actors, state contractors, state whatevers. Why would the state have any true rights to require a return? And it's not uncommon, for trustees to receive correspondence from a state internal revenue service saying that we haven't received your return. We haven't received this. We haven't received that. It's not uncommon. And that's knowledge right there, what I just said. But the fact of the matter is if you are properly administering the trust, you have all the substantiation in order, all of the minutes, all of the amendments, the indenture itself, and you know the true powers of the trustee, you're likely not to encounter that situation. Seriously. So there it is. Compile all the bank statements. Number 1, aggregate all disbursements for K1s. Number 2, aggregate all expenses from W-9s for the 1099s. Number 3, secure the EIN document for the trust. Number 4, get the W-9 for the trust. Number 5, get the short form for the trust. Number 6, put it in a folder. And if you're dealing with LLCs, you're going to have to do the same thing for the LLC. EIN plus the entity designation. Articles of organization or incorporation. Bank statements. Expenses. Distributions. All of it. Put them in the folder. Whether it's a folder on the computer, a laptop, doesn't matter, or an actual physical folder. These are the end of the end of year duties for trustees. We get into that and more in the training. I think it is important. I don't really like to speak on the benefits too much lately of trust, right? Or private trust. But I mean, most people that I know of, outside of, the asset protection, outside of limited liability, most people are looking for tax avoidance, legal tax avoidance. And, for those who don't administer trust, for those of you whom haven't established your private estate yet, your business trust, your asset trust, your family trust, for those of you who maybe don't comprehend what I'm saying yet, and for those of you who are on the fence or maybe just haven't gotten around to it, legal tax avoidance, specifically legal tax avoidance, is arranging one's affairs in a manner as such it does not, or he or she does not incur tax liability. It's legal avoidance. It's before you even start doing business for that year or for that quarter or whatever. Your affairs are arranged in a manner to where you legally avoid taxes. Legally. I would say it's not hard, but it's, I would say in the beginning it's a little difficult. Tax evasion is you operate in a certain way, you incur tax liability, and you're looking to evade that tax liability. You want to allege that, a certain items or services you know cost more than they actually did. Inflate in expenses, pad expenses, inflate expenses. Attempt to not claim certain income, tax evasion. Selling corporate or trust assets below market value, tax evasion. But the biggest thing is most people don't know how. The average person, 99% and a little above, I would say, more than 99% of people do not know how to structure their affairs in a certain way to where they do not incur tax liability. And that's the main thing that and it's not a problem. I'm not judging. This is more from a statistical standpoint, a statistician. It's just information. It's just, it's not emotion. But that's the biggest deal for most people. And I understand that. But these structures properly administered, there's no state return. And it's these structures are able to exert control over itself and its transactions to where, it's in a league outside of any other public structure, individual, corporation, LLC, partnership, public trust, public estate. And when I say public estate, I'm talking about jurisdiction within the contract. Any contract, whether it's a trust indenture or it's a contract for business, contract for services, what have you. Any contract that's legit is going to have jurisdiction clause in it, and that jurisdiction clause typically goes to it typically sounds like this contract will be administered and governed under the laws of, and then they'll have a state, the state of California, the state of Illinois. That's a public trust. Period. And they'd be like, well, my trust is a contract. It's not public. It's, my lawyer wrote it up. Well, your lawyer is a public entity, a lawyer. That's public, 100%. It's not private. And lawyers, they have state bar cards, and inherently they're going to invoke the state jurisdiction. And that's just the way it is, whether you agree, whether you understand, whether you comprehend. That's just the way it is. So, a public trust is a trust that, is going to be governed under the laws of the state of blank. That's what makes them public. And if it's governed by the laws of the state has, trust statutes. And it has to come under those trust statutes. Well, when it's not governed under the laws of the states, it has a trust indenture, trust contract, and its governance falls under the trust contract. And if you never heard this, it's hard to believe. It's probably, some crazy dance. This guy's crazy. He's tripping. Just look it up. One of the easiest places to start, in my opinion, is the Hague Convention on the Recognition of Trust. The Hague Convention. The Hague Convention on the Recognition of Trust. Just do a search for it. Get the PDF, download it, look at it, read it like 7 times. Read it. Read what it's saying. And look at all the ifs. There's a lot of ifs in there. And look at what comes before the if, and and look at what comes after the if. And when I say if, I mean if, the letters if. Look what comes before the if, and look what comes after it. And just that's it. Those the sentence that says this, and then it says if, and then it says something else. Just read that. And then you'll begin to comprehend the power of contract. Hands down. So if you're interested in learning more, you can email me, admin@welcometothefoundation.com, and you can sign up for trustee training. If you want to be trained directly by me, you have to email me. If you would like to sign up for the automated training, I'm gonna tell you, it's I think, what is it, $500 to start up and $9.99 a month. There are lessons added, minimum one lesson every 60 days. You can find the link in the description to sign up for the silver tier trustee training. If you want the gold tier or the platinum tier, you have to email me, admin@welcometothefoundation.com. But I think the most economical way to do it is by doing, the silver tier trustee training here at the foundation. 100% automated. You just watch the videos, you watch it again, rewind it, watch it again, rewind it, watch it again. 100% automated, but you get exactly what you need. You're going to get everything that you need. And it's what, has been asked for a lot. There's no way to sign up at the website. I think we're going to just kind of keep it like that. But if you look in the description of this, this show here on YouTube, you'll see it. And we also have a magazine. You probably didn't know that. The foundation has a magazine, y'all. 3 issues in. Working on the 4th right now. It's one of the most luxurious things I've ever done. I'm not even going to play it. I've done a lot of things in my life. But this is dope. Yeah. Digital or print. Yep. And you can find the link for that in the description as well. I suggest that you, do your dance with the trustee training. I highly recommend it. If you're interested. Not legal advice, though. Y'all know what it is. I cannot give you legal advice. You want legal advice, you must contact an attorney or a lawyer who is competent, and they will give you legal advice for a price. Can't do it. Won't do it. But yeah, that's the episode. That's the show, end of year trustee duties. My name is Sot L here at the foundation. It has been my absolute pleasure to, bring you this episode. Minus the music. Some would say yay, some would say nay. Minus the current events. You'll get those tomorrow. Here on YouTube, we'll send out an email for all of y'all on the email list. Straight up, just, straight up show. So with that being said, welcome to thefoundation.com. Admin@welcometothefoundation.com. You can book a consultation with yours truly at welcometothefoundation.com, or you can email me, admin@welcometothefoundation.com. It's only $55 for a limited time, $55 for an hour. And we usually go over too, and I'm not playing. I'm not really tripping. But a workman is worthy if they hire, and are you invested in your private education? Are you? That's on you. 100% on you. Check the description for the silver tier trustee training. Check the description for the foundation magazine, digital and print. And I will catch y'all next week on the foundation. I don't know. We might go YouTube. We might go back to Blog Talk. We'll see. Soon we'll be trying to, dual simulcast or whatever. I got to get some, cameras, tripods, and, things of that nature. Y'all have a great week. Take care of yourself. Enjoy yourself. Make sure you say 10 things that you're thankful for before you go to sleep tonight and every night. It's very important. Y'all check out current events tomorrow. And I'll catch y'all next week.